traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is the first day of the month, August 1st. It is Sunday here in Honolulu, Hawaii, Monday in Australia, the beginning of the Forex trading week, and Forex Gold currently trading nominally higher, 1180.70. Traders, as you recall, we did issue a buy signal, and this was on Friday. Traders who got in should have got in somewhere around 1179, 1180, somewhere in that area. And that was based upon confirmation of a three-day pattern. That pattern is known as a three-river morning star. That's right in here. In essence, what happens is after you have the market go into a defined downtrend, you get a long black candle which will come down. And with that long black candle, what will happen is on the following day, you will get a star or a small bodied candle. It can be a spinning top, which we got right in here. And then on the following day, what you get is you get a red candle which moves back up. And typically you want it to be a long candle or as long as possible. Confirmation of that pattern would be on the following day, you get another red candle, meaning a higher closing day, and that red candle begins to move up and out of the range. Typically it will take over the range of the black candle, except in this case you did have a candle that had about a $25 range, so that's going to be pretty difficult to do. We did place our stops at 1155, 1155 on a protective stop. Also, as you recall, there were a couple of reasons that I liked the positioning that I saw as this market did trade lower, and that was that we had, as I called it, a good history, technical history of support in this area. Of course, when we look at our Fibonacci numbers, when this market came down, it steamrolled through 23, formed a base, kind of meandered around, then broke below that 38% level at 1180. However, when it got to that next level, that's 1154, we had good support. One, when you look at a couple of the lows, this is back in May. And of course, this low, which I think is very, very critical because it is the bottom of that fourth impulse wave right in here. When we extend them, of course, we didn't quite reach the 50% retracement level, but we did reach this support level here, 156, 157. And of course, we got this breakout when it did break above this one candle as we talked about on Friday. Traders, as you also know from Friday, I have gone ahead and labeled this our impulse B wave in our corrective phase. Of course, if we're looking, this is the final wave 5 in that impulse phase, goes into our corrective phase. And of course, during our corrective phase, we start with wave A, which I illustrated as this one here. And then I did believe and counted the beginning, or this bottom of the doji. It does appear at this point that this is the beginning of our B wave. Now, where are we looking for our B wave to go now that we've entered our long position in this area? Typically, the B wave will go anywhere between 50% right here and 75% in that of our A wave. So that I would look for this B, as I said the other day, 1212 would be the first area that I might consider. Less likely, but nonetheless still within the realms of Elliott wave, is going to be a move up to about 1235. I think that at that point, and as we talked about on Friday, we'll look for some sort of a reversal indicator. When we see that, we will look to cover our long position and initiate a short. Because the interesting thing, if this holds true, it's either going to be what's called a flat correction, and on a flat correction it will typically just come to this low area right in here, this 1165, 1164 area. Now on the A wave, you'll get the same characteristic as it comes down on the zigzag pattern. You will get your B impulse, but the defining characteristic of a standard correction or a zigzag correction is that final C wave will come in and it will make a new low. In other words, it will take out the low that was created at the bottom of A when it went into the B wave, as we see here. In other words, it will make a new low below this area here if we have what's called a standard correction. Now, on a standard correction, this wave can be equal to the size in terms of amplitude of wave A, or 1.61 times or 2.61 times as large as that of wave A. So you can get a very sizable correction. The C wave can be the strongest of all the corrective waves. So really, the best way for us to look at plausible scenarios within this corrective phase that we're currently in is to take a look at past history. What I've done is I've put kind of compressed the chart so you can see this last corrective phase that we had. This was in 2009, and this was when we made our historical and contract highs right in here at 1221, our A, our B, and our C, and that was a standard, what was called a zigzag or corrective phase, standard phase. You notice that we had quite a sell-off. We had a very, very strong, in fact, impulse B wave, and then an even stronger C. What will happen with this wave? Only time can tell. But I can tell you this, we are, in my opinion, in for some interesting trading activity over the next 2 and 3 weeks. Recommendation, obviously maintain long position, maintain the stop at 11.55. We'll see what happens this week. Gary Wagner with WFG4X.com. As always, wishing you good trading. Bye-bye.